Of the Business and Trade Committee, where we look at some of the dangers and opportunities connected with dynamic pricing and the issue of whether consumers in our country are being ripped off. Anne, would you mind if I start with you? You've obviously warned about the risks of dynamic pricing in the past. Can you just give us a sense of how widespread has dynamic pricing now become?
Absolutely. So we first did some research on this in around 2018, where things were we were looking at the emergence of dynamic pricing in online sectors and sort of thinking about how that might spread into essential markets. I think as increasingly shopping has moved away from the high street and online, which has been slightly more risky for consumers around pricing practices and kind of how firms can nudge people in the direction of taking out kind of the products and services they would be kind of most profitable for them, I guess. And definitely it's much more widespread now. We see it across a wide range of sectors, from kind of the sort of ticket prices of concerts. We also see slightly different version in terms of like personalised pricing in other sectors, where kind of the price that you get maybe for a holiday sort of varies depending on your characteristics. So it's really widespread now.
When did that start? When did it start really accelerating through the economy?
I think it's quite hard to tell, to be honest, because there's so much, such a fast-paced innovation, and it's quite difficult to track it across sectors. We definitely, in terms of online shopping, it's been a trend over the last more than a decade, but we definitely saw a big rise in online shopping during the pandemic. So we've seen a lot of innovation around that time as well.
So if you were forced to characterise how widespread it's become, would you say it's now prevalent in most sectors of the economy, a minority of sectors in the economy? Give us a sense of the scale.
I think it varies depending on the type of product. So, for example, you still don't have a lot of dynamic pricing in kind of your essential services sectors, because it's much more difficult to do that. For example, in energy, you've got the price cap and it's much more sort of singular, although we expect to see that increase. But in sectors where you see a lot of surge in demand, so things like the sort of concert sector, holidays, that kind of thing, you do see a lot more of it.
Okay. And Alan, in the hospitality sector, would you say that this practice has become more widespread, or has it kind of always been there?
Well, it is widespread to start with. I think if you take a broad definition of this to include everything from, you know, it being cheaper at the beginning of the week to go out for dinner than at the end of the week, or lunch being cheaper than dinner, or January being cheaper than August to go away, it is very widespread. I'm sure we'll break down into the specific ways that this works. But I'd say it's always been there, either in the 2-for-1 burger and chips on a Monday type deal, or I was talking to a hotelier in the Midlands who was describing, he's been doing it for a very long time, and he was describing when he started in his career, he used to every year write down on each day how many inquiries they had for that day per room, and then the next year he'd get out that book. Days would be charged more or less than other days. So although I think algorithms mean that we can match supply and demand more accurately than we have in the past, I'm not sure it's that new. It's just a bit cleverer.
Yeah. Okay. Sonia Kumar.
Yeah. Mr. Anne Pardoe, are some groups more vulnerable than others to being ripped off by dynamic pricing, and who are the most vulnerable in society?
So I think in terms of dynamic pricing specifically, there's not a huge amount of evidence so far on whether particular groups of consumers are experiencing worse outcomes. But we have done some research with the Behavioural Insights team to kind of look across what types of consumers would be more likely to be vulnerable to this kind of pricing. We intend to sort of then expand that out to sort of test some of our hypotheses. So, for example, people who have poor mental health can sometimes be more susceptible to pricing tactics like hurry by now, 200 people are looking at this same page. Similarly, sort of people who are in financial difficulty and sort of need to make quick decisions and maybe have less options might also be more impacted. As I say, kind of the evidence in terms of who is most impacted by this at the moment is quite slim. But we think it's so important that we've started doing some research in this area, but that regulators and the firms who are doing these practices themselves need to look at their own data, think about what they're doing, and see what the outcomes are in terms of their own customer bases and the data that they have. So not just use that data to understand who they can drive most profit for, but also if there's any unintended outcomes in terms of discriminatory pricing or outcomes.
Sorry, I've got something wrong with my neck, so it's not a deliberate shaking of my head. Sorry, I would like to come in, but I wasn't intending to shake my head.
On that point?
Yes, just on consumer attitudes. I think one of the problems with dynamic pricing and variable pricing is that consumers don't necessarily know where it's happening, that it's not always transparent. Mm-hmm. So we've been doing a lot of work on pricing practices, and we know that there's a general concern that people feel that they're being misled with pricing practices. But to try and understand more about how people view dynamic pricing, we've conducted some focus groups recently where we looked at dynamic pricing across the board, but specifically looking at ticketing and looking at flights to understand how people view dynamic pricing. And I think it's quite a nuanced perspective that sometimes people do feel that they benefit. I mean, people have got used to, say, the Uber type model in some cases where they feel that that means some people will get cheaper prices at certain times and some people will pay higher prices. It may mean that there's increased supply that wasn't there before. But people expect there to be transparency. They also expect there to be predictability, so that if they are exposed to dynamic pricing, they're in control and they've got a sense of the outcome. And in response to the question about vulnerability, dynamic pricing is likely to benefit those most who can be flexible in how they shop or have the ability to adapt how much they pay for particular prices. So if you're on a low income or you're vulnerable, it's less likely that you're able to benefit from that. And so I think we feel that there's a lot of dynamic pricing is covered by existing consumer law, but we do feel that the framework needs to be strengthened to deal with it.
And how many contacts are you getting from people that feel like they are getting an unfair price?
Well, because people don't always know that they're experiencing it, people aren't necessarily proactively coming to us. But I think the big difference was obviously the Ticketmaster Oasis issue, where we did have a lot of our supporters coming to us and providing screenshots of the journey that they'd been through, which showed that people weren't anticipating dynamic pricing. They were told that it was happening. They weren't told that it was happening, and then they were suddenly having to pay a much higher price than they were expecting. So in that case, we do feel that there was a breach of consumer law in that particular case, because there's some quite clear obligations around misleading omissions or misleading actions that we don't think Ticketmaster followed in that case. But more generally, I think there's some issues where when people are experiencing dynamic pricing, once they're already in that transactional process, that can be very difficult for people to be in control of. Because even if you're told you've got dynamic pricing, if you don't know what you're ultimately going to pay, it puts you in quite a vulnerable situation, and that's where we think the law might need to be tightened.
Okay, can I have the same question in terms of, you spoke about with Anne Pardoe, you've said a bit about sort of you've got data. How many people have contacted yourself?
So in terms of dynamic pricing, it's a really similar situation to what Sue said actually. We do get calls to our frontline advice services about pricing issues, but they tend to be more visible things like drip pricing. So when you get a low headline price, and then as you click through, you get charges added on, and also around subscriptions. But it's actually, the Oasis case was really interesting because it really shone a spotlight on it for people, I think. But generally, if you're just at home looking for a product and you get your quote, you don't necessarily think or have visibility about, oh, am I paying a different price? Is mine higher or lower? And really, so we don't get a huge amount of calls about that. But what we can do with the data that we have is we can kind of aggregate some of that information from our client data and take a look across how much people are paying and see if we can spot some trends in that. So we did that with car insurance pricing. We used data from sort of tens of thousands of our debt clients where we have their income and expenditure, and we were able to look at how much different groups of people were paying for their car insurance, and through that we found that people of colour were paying on average like £300 a year more than white people, and that's even after you've controlled for things like crime in the area, age, that kind of thing. So really it's so hard for people to get an accurate picture and kind of make a complaint because you don't have the data on to do that, which is why we can do exercises like that, but also we're looking on kind of regulators and firms themselves to kind of really interrogate how are these practices impacting our customers in perhaps like unintended ways that could lead to unfair outcomes for people.
And if I come to Sir Alan Simpson, how do you think we can look at these insights and look at best practice as shared from the industry to sort of we can sort of tackle these barriers so as consumers get the best price?
So I think there's a foundational point here, which is that variable pricing takes prices down and up. So if you've got a pint being, let's say we're in London, £6.50, less than other places on one day, and then because there's a football match on or because it's after 11 o'clock at night, say, and the costs of serving are higher, it's suddenly £9. Which of those two prices is the correct price for the pint of beer? Discuss. I think it's worth saying that certainly hoteliers will say that it's more regularly true that dynamic pricing drives a price down from a given point than it does pushes it up, although both happen, right? So when responding to the opportunities and challenges of dynamic or flexible pricing in general, I think it's very important not to prevent those things from happening accidentally. You don't want a situation where you can't offer a deal, right? That would be a strange position to be in. I think there are three things really. It's competition, transparency, and choice. And choice and competition are different. Competition is about can the consumer buy a similar item from more than one place? So are there two pubs on the high street? One is doing is showing the football, that's got significant costs attached to it, therefore they're charging more than another pub. So there's kind of point in time competition. And similarly, you know, hotels in a popular spot, you know, is there more than one hotel? The second thing is transparency. Can consumers know what they're paying at the point that they pay, and can they predict it? I have no problem with a hotel offering a room-only rate and then, you know, charging you more if you want to go to the spa and have a treatment or have breakfast on top of the room-only rate. And I think we'd all recognise the fact that you can go onto the aggregators now and you've got a choice of prices where you could cancel or not cancel, have breakfast or not have breakfast. That helps people manage their costs. And then the third thing is choice. Again, we've started this session with the assumption that variable pricing pushes prices up for vulnerable people, but we'd also all recognise the pensioners' fish and chips deal on a weekday, which is cheaper than the fish and chips of an evening, which is the same thing. So I think choice, whereby people can, as much as possible, choose to go at peak times, which costs more, or go off peak, which costs less. And if you have those three, I think consumers can make the choices that they want.
Yeah. Thank you. Joshua Reynolds.
Thank you, Chair. Sue, many consumers believe that their browsing data is taken into account to determine the price that they'll ultimately pay for goods. So some people have taken to buying holidays in private browsing mode or going to a family member to eventually buy the holiday they've been searching for weeks. What evidence have you seen to support those kind of concerns?
We know that people's personal data is increasingly being used to tailor prices for people in particular circumstances. I think, as I mentioned before, one of the problems is that as a consumer it can often be quite difficult to actually know when that's happening or not. So transparency is really key so that people understand if their personal data is being used. We know that in sectors like insurance, for example, as Anne was mentioning, people's data has been used for some time, you know, in multiple ways in order to set the price for consumers. I think what's changing is it's moving into other sectors, and it's much more difficult for people to actually be in control of that and to navigate that. I think with both the personalised pricing and the dynamic pricing that we've been talking about, there are really clear requirements within consumer law about transparency and about the importance of not having misleading omissions or taking misleading actions that would lead people to make a decision that they wouldn't otherwise make. With a lot of these issues, we think there's a general issue around enforcement of existing consumer law. With the Oasis Ticketmaster issue, the CMA is obviously investigating that now. But we do think from the information that we've seen in that specific case, it does seem that there was a breach of consumer law. But one of the challenges is that the CMA is obviously involved with that, but a lot of these issues will fall to trading standards departments within local authorities that are really depleted at the moment, and so there isn't necessarily an effective deterrent or the ability as pricing practices become more complicated to make sure that the enforcers are keeping on top of those and ensuring that there's compliance.
So what would you say if there were a few things that the government could do to ensure that prices were more transparent for consumers? What would you suggest? And the way that prices were determined were more transparent, what would which suggest?
Well, I think the existing consumer law takes us quite a long way, and it's making sure that that is applied and effectively enforced. In the case of Ticketmaster Oasis specifically, which I think is a thing that has, really triggered dynamic pricing in people's minds, we do feel that that was an issue where there should have been transparency. That is a very clear enforcement issue. At the moment, the CMA is investigating, but is having to do that through the court-based system. From April, it will have direct enforcement powers under the Digital Markets, Consumers and Competition Act. So it will be able to take direct action to make sure that businesses are complying. So it's really important that it uses those powers effectively to make sure that businesses are complying. One area where we feel there is a potential gap, as I mentioned, is where consumers are exposed to dynamic pricing once they've actually entered that transactional process, that even if you have transparency that says we're using dynamic pricing, you're then put in a kind of quite a pressured situation, as we saw with the Oasis sale, where you're then suddenly potentially seeing the price double if you're buying tickets for family members. We've seen cases where people are suddenly paying, £1,400 extra than they expected as a result of that. So that it's interesting that in Australia the government has proposed that there should be a ban on dynamic pricing during the transactional process. So I think we think existing law needs to be properly enforced. We've called on Ticketmaster to refund people's money because we think people should have that money back. But we think that dynamic pricing in general, it can be good for people, but we need to make sure that in specific circumstances how it's operating is understood and potentially strengthen the law.
Okay. Rosie Writing.
Thank you. So the question to all of you really is, what do you think is important for the business community in the wider conversation of dynamic pricing? Mr. Simpson, I'll come to you first if possible, because you touched on it a bit earlier, but as you know, the government is consulting on a plan to cap the price on resale tickets. What do you think specifically are the positive and negative implications of price caps for consumer goods and services?
So just to start with the point that the hospitality sector is a separate one to the gig and other sorts of fund sector. So I can't talk with any expertise about how the economics of that works. Within hotels, bars, restaurants, that sort of thing, I'm not sure price caps are necessary or appropriate. I'm not clear that the government should be saying this is how much a pint of beer should cost, for example. And I come back to this point about actually dynamic pricing is more regularly used for prices to come down than up, but economically that is the same thing. So if you say, well, okay, the rack rate of a hotel room is £200, hopefully in the summer, and over the winter the algorithms will pull that price down, and on rarer occasions might push it up because there's a spike of activity in the town. I'm not sure it's for the government to define how much a hotel room should cost. That strikes as being unwise from first principles. For me, it is about transparency and competition and choice, and if you can achieve those things, you're fine. I mean, equally, the price of a ticket to go and see a top rank band versus should Cooler Shaker reform, which would just be me and 2 other people going to watch them, I think. Those 2 prices are going to cost differential amounts. Are we going to say that there is a price for a ticket, which is how much you charge? I don't think so. So therefore, it's much more about protection of the consumer through transparency and competition and choice, I think.
Thank you. Did you want to come in on that?
Yeah, it's just on the secondary ticketing market, because over several years we've carried out investigations and repeatedly found problems. The CMA and others have also investigated it. And we see that people are often paying hugely inflated prices. It may be that the tickets that they're buying aren't even genuine, and it seems very out of control. So we're pleased that the government is consulting on controlling that market. And as you say, one of the options that they've proposed is a price cap. We're considering the benefits of that at the moment, but as part of that, we've been looking at where price caps are applied in other countries. So in Ireland, for example, there's a price cap where you can't sell tickets above the face value for those events that are designated. And anecdotally, from talking to the consumer and competition authorities there, they feel that it is significantly reducing consumer complaints. So we think that it is worth exploring that. Australia has had, I think it's 110% in face value in Australia, but quite a few countries do have it. So it's just making sure that there aren't any unintended consequences. But generally, that market seems to be quite out of control. So I think it's looking at whether protections need to be strengthened, but as with all of this, just making sure that there's a really robust enforcement regime, because quite a few things in this space are regulated, but then businesses don't necessarily comply, and then it's quite hard to hold them to account.
Do you have concerns that that type of regulation would push resellers onto black markets, for example?
Well, that's one of the arguments that is put forward against it. I think the secondary ticketing sites who say that need to provide evidence that where a price cap has been introduced in other countries, that is actually the case. I mean, that's what we're trying to understand at the moment, but I think it's clear that you need to have an effective enforcement regime, but it seems that where some countries have been running these, have had price caps in place for a while, so we just need to learn from their experience and make sure that we design it in the right way if we did go down that route.
Thank you.
Thank you.
Okay, Sarah Edwards.
Thank you. Alan, you've given some good examples of dynamic pricing or variable pricing. So I just wondered, as there's sort of a debate currently going on in the hospitality industry about, the virtues of it or not, and particularly around the challenges for businesses at the moment to stay afloat, could you sort of talk to what you've learned about sort of the both sides of the debate? And I know you've given some examples.
Yeah, so I sort of said that it isn't a universal practice. There are some businesses who charge the same thing. A CAF will largely charge this. They'll only be open during the day. The menu doesn't change. It's the same demand largely across a week. So they might have an incredibly stable pricing model. But almost everybody else will have some version of variable price across a given period. The challenges are much more around where we are economically right now, whereby the margins available to businesses in my sector are very tight. They got tighter after the budget considerably. It was £3.9 billion of extra costs. We have got we've probably capped out the consumer's ability to pay more. Normally the response to that would be to try and drive demand at lower demand times by doing deals. The ability to offer those deals has been reduced by the fact that those prices are fixed. The other thing that So that's a foundational point. The other thing which is it's worth bearing in mind is that business owners will often say that one of the virtues of variable pricing is it means that you can offer employment across a week. So if you want to employ people in the low season in a holiday area or on a Monday night, you need to drive the demand, and you drive the demand through variable pricing by reducing the prices against your peak periods of August or Friday night. So there is a concern about any unintended consequences which would stop people being able to do that demand driving. But again, the core point here is that variable demand is more regularly used to reduce prices in hospitality than it is to drive them. You will see more occasions where there's a happy hour or 2-for-1 deal or burger and pint as one package than you will times when it's the price of a drink has gone up because the football's on.
Thanks. And so just following up on that point, do you think that there is a negativity around it that we're seeing that's come from other practices? Because obviously if they're already fairly, used to the idea of the dynamic price, but they didn't call it that before, do you think there's a change in the sort of consumer attitude that might need to take place?
No, I mean, look, again, I'm not an expert in how pricing, for instance, in concerts works. But again, as I say, you're already going to charge more for the tickets to your top flight bands than you are to go and watch a folk act in your local pub. So what is the natural price for a concert is a complicated one. But I genuinely don't think consumers in general have a concern about the fact that a pub might do a happy hour on a Monday and a hotel will charge you more in August than in January, despite the fact that, as a father of an 8-year-old who sat behind me because the school's shut, I have to pay the higher price.
Thank you.
Antonia Pence.
Thank you very much. Mr. Greatrex, football is obviously a little bit different because of fans' loyalty to their club and to their country. Now, you've warned that FIFA may introduce dynamic pricing for next year's World Cup. And what would you think would be the impact of that on fans?
We're starting to see in the English Premier League some clubs start to introduce what I would sort of refer to as more as an analogue version of dynamic pricing, meaning that unlike in the past where you would say this is the price for your ticket for every game in the season, now they're not publishing the prices until they go on sale and they vary. So to give you an example, Fulham, which happens to be my team, £160 to watch them play Manchester United last Sunday. It was a terrible game, but people paid £160 for matchday tickets. For the same seat against some smaller teams, it will be £100, or behind the goal £70 and £50. So they change them depending on what they see as the demand. So that's the dynamic we're starting to see. I think with FIFA and the World Cup, there's a lot of demand for World Cup tickets. Obviously, the next World Cup is in the USA, predominantly USA, Canada, and Mexico. In the US, sport has had dynamic pricing for quite a while now, particularly NFL, but also in soccer. So what the expectation is that will do is will drive prices up. It's not as though the other side of it that others have been talking about when things get cheaper. That's not the experience that's happened at football. It's all about increasing prices at particular times rather than reducing prices for less attractive fixtures.
Okay, thank you. And do you think there is any good practice that can be drawn from what football do, or are you just worried about the developments in this area?
Well, we're worried because what we've seen over the past couple of years, is what feels like to many supporters exploitation of their loyalty. Because as you said at the start, I'm not going to go and start supporting Brentford rather than Fulham because their ticket prices are cheaper. And it's not like going to a concert where you might go to one concert to see somebody. You often go every week or every other week. So it's different in that sense. And so that's why it feels like exploitation, because we're finding that lots of different ways, reducing concessions, removing concession prices, all that are driving towards increasing prices, and how far you can get away with pushing that. And dynamic pricing, it feels as though is going to be another tool that's going to be used by those who are seeking to maximise the revenue from supporters.
Thank you.
How many clubs have now got this analogue version of dynamic pricing?
In the Premier League, I think there's 3 or 4 that have it in the way that I described, where they don't price it. Yeah, but what we're starting to... For a while, they've had different categories of games, but not publishing the prices until they go on sale is relatively new. It's happened the last couple of years. The people at Fulham are very proud of it. They think it's a great thing, and almost revel in being criticised for having very high ticket prices, which feels slightly perverse to me. But we're starting to see in the Premier League clubs, 10 of them are now owned by Americans. A lot of them who own American sport franchises. You can see lots of ways in which the American experience and marketing in sport is being driven into Premier League football because it's a very successful product, and they see that as a way of increasing value.
Is American ownership of UK football clubs fostering the spread of this practice?
I think it is, because it seems to be the clubs that have American owners that are at the forefront of increasing prices, removing concessions, moving towards a dynamic pricing model, because it's what happens in the franchises they run in different sports in the US. And they
Based
see
on-
Premier League as being undervalued.
Based on what you've seen in the United States, I mean, what's your fear for where this could end up to the detriment of fans?
Well, my fear is that what we're seeing happening is that the loyalty of long-standing supporters, they will end up being priced out. What you get in the Premier League, and you get it in the big clubs and particularly in London clubs, increasingly one-off visitors, tourists who want to see a Premier League game are not particularly attached to either team, or they might be fleetingly attached to either team. That affects all sorts of aspects, the atmosphere, but it's increasingly the case that supporters feel they're being priced out as a result of this. Now, that isn't just dynamic pricing, that's a whole range of different things. But dynamic pricing, from what the early signs we've seen of it, seems to be being used as a tool to do that, rather than in other sectors where it's about trying to, manage and meet your cost base through different periods of attractiveness. It seems to be quite
And
different.
how quickly is this threat unfolding?
Well, it's been that, we will all remember the period when the football matches were played without any fans because of COVID, and every football club said football without fans is nothing. That season after the fans coming back, this started to ratchet up, prices increasing beyond inflation in the Premier League, removing concessions. So I think Nottingham Forest, as an example, a child's ticket went up for about £100 to £850 once they turned 17 a couple of seasons ago. So all these types of things that are happening across most clubs, not quite all, but most clubs in the Premier League in the last couple of years, and it seems to be accelerating.
And it's your view that this is basically ripping off fans?
It's exploiting the loyalty of supporters is what it's doing, and dynamic pricing may well be a tool that's being used to do that alongside a range of other things. And my fear about that is that what you're doing is you're effectively cutting off the health of a fan base, which is a big issue, big thing for many, many people in many communities. But it's also pretty dangerous for the club. But the people that are running the clubs now, they may not be there in 3 or 4 years' time. You might get relegated, and the consequences of that come home to roost.
And what's your advice on price caps to ministers?
Well, I think in the context of football, I think what is important is that there's clarity about pricing. I think the most important thing is people know what they're paying for, and that in relation to sporting tickets, that the very obvious and blatant exploitation of loyalty is not happening. You don't remove concession prices. There should be concession pricing. You don't change the prices match by match in a way that is designed to increase the number of tourist-type one-off visitors, and do that to the detriment of the long-standing loyal fan base that keeps clubs going in the tough times, just to ride the good times.
Thank you. Matt Weston.
Just, if I may just pick up on that point, I mean, I think, we think back to the roots of the game and how important clubs were to communities and to those they were built round. And you think that it's going to price those people out, isn't it, essentially? And I think a lot of fans will understand that you may have a premium price for a Man United game, although I'd be very surprised at that. But really, it's about having transparency about what the price of that ticket will be at the point you think about wanting to go along to it, and what the premium might be as opposed to a game against whichever club in the rest of the league. That's the danger, isn't it?
It is, and there's an allied danger, which is that traditionally season tickets have been a way in which loyal supporters have bought a ticket which entitles you to every league game, so 90 in the Premier League, 23 in the Football League divisions, and the overall, the average price of those tickets would be lower than if you bought a one-off matchday ticket. But what's increasingly happening again in the Premier League, and a number of clubs have done this, is they're reducing the number of season tickets because they see the opportunity to be able to sell match-by-match individual tickets at a higher yield, and doing that by targeting people who are not part of what you've just described, the community and the long-standing supporter base. And that's the heart of our concerns about what we see as a pattern of behaviour happening. It's happening in the Premier League because the Premier League is the most successful and has 99% occupancy for its league games, so they're able to do it more effectively. But what happens in the Premier League tends to go down into other divisions later.
But is that pattern of behaviour basically just called greed?
Well, I think it's called exploitation.
That's what FIFA's looking to do. I mean, they're obviously not very wealthy, but they need the money. I'm joking. Can I just throw a question to all of you, and that's just really about your engagement with both DBT and CMA, just about how you're helping shape policy and regulation about all these different forms of what we might describe as variable pricing. Maybe start with you, Sue.
Yeah, thanks. Well, we have regular contact with both the CMA and DBT. The CMA is looking at dynamic pricing at the moment in general. We've conducted the consumer research that I mentioned, which really reinforced, I think, following on the point about how things are working in football, that people are open to dynamic pricing, but where they have concerns is if they don't feel it's transparent, they don't feel it's predictable, or they don't feel it's fair and they can benefit, and they feel that businesses are just doing it in order to make more profits and they're not seeing the advantages of it. So we want to feed into that review and to make sure that the CMA understands how this is operating across different sectors and whether there is the need to take action. And I mentioned that we think that one area seems to be dealing with dynamic pricing in the transactional process, not necessarily banning dynamic pricing in general, because we feel that that can be beneficial and it's often covered by existing consumer law. DBT also has the review of secondary ticketing, which we're feeding into, and a call for evidence around the primary ticket market and how that's working as well. So that we'll be engaging and feeding into those. We've also been very involved with the Digital Markets Competition and Consumers Act, which was adopted last year, and the Competition and Markets Authority has just consulted on guidance for how that will apply to different types of practices. So we've been feeding into that as well to make sure that it clarifies the situation of how existing law applies to a range of different pricing practices as well.
Thank you. Anne?
I sort of agree with everything that Sue said. We've been engaging with DBT and CMA across a number of issues around pricing, and really welcome the focus that we've seen on this over the last couple of years, kind of culminating in that Digital Markets Competition and Consumers Act, a bit of a mouthful. And I think like the measures which are in there are really positive around kind of the CMA's additional powers and kind of clamping down on some of the most egregious practices. I think what I would say though is that with sort of fast changing markets like we see online with things like dynamic pricing, subscriptions, all sorts, like kind of this it's almost like a regulatory whack-a-mole. So like you kind of do the process of kind of identifying there's a problem, consult on a solution and implement that. Kind of by the time you've kind of been through that process, which in the case of subscriptions, which we are pleased by the new measures in the Digital Markets Act around this, that was 10 years. So we first raised concerns about this in 2016. The Act's now in, but it doesn't come into force until 2026, so that's a decade. So it's really difficult to keep up with these fast-paced markets with that kind of approach to regulation. So what we'd like to see is more of a focus on like the outcomes that different markets and different practices are delivering for consumers. So, for example, like the FCA has introduced more of like an outcomes-based focus where the onus is on. There's a general duty for firms to treat customers fairly, and they have to demonstrate that they're doing that, and when sort of harms occur they have to demonstrate how that happened and what they had in place to prevent it, and there's kind of also a specific thing in there around, so they say that they would expect firm monitoring to identify where groups of consumers get worse outcomes than other consumers. So rather than having a really detailed rule book, which takes a long time to put in place and a lot of time to keep up to date and can kind of miss the mark, it also frankly ties firms up, sort of tripping over themselves, like have we complied with this specific regulation and this one. And also for those firms who are less focused on good outcomes for their consumers, if I want to put it diplomatically, like they can always find a way around those. So yes, we support these rules, but we do need to see kind of more of a focus on what's the outcomes we're delivering for consumers rather than the detailed rules.
Alan? We haven't had any real engagement with anything other than the DCMS, because at the moment you'll be aware there's legislation coming towards you from the Lords on football regulator, which includes within it requirements for engagement with supporters on issues including specifically ticketing strategies. So it's more around the way in which that regulatory function will work that we've been engaging. So it's with DCMS.
Okay, and you're content with that level of engagement?
Yes.
Okay, Alan?
Yeah, very, very good on both counts. My team are meeting with the CMA as we speak. That's what my team are doing with their late morning, early afternoon. They were in regular contact with the team over the drip pricing changes on this and a number of other issues. It's very strong. Equally with DBT, the official team there are very, very strong as well. So we are content with the level of engagement. I think that the core message, or the core regular conversation in that tends to be that certainly this issue doesn't appear to be one that is particularly relevant to the hospitality part of the economy.
Okay, thank you. Good point.
Thanks very much. I just want to explore the interplay between pricing and financing for a moment, and perhaps this is to everyone, but perhaps we start with Sue. So many consumers now are interacting with prices and perhaps checkout pages that support offers of financing, particularly buy now, pay later. So there's two questions really. First of all, how developed is the policy and regulatory understanding of that link? And secondly, whether that link and those developments have been driving positive outcomes for consumers.
We haven't looked specifically at the link, but I think that's a really important point. We've long argued for stronger regulation of buy now, pay later. We find that often consumers see it as a pricing option and they don't realise that basically they're getting into debt. There's a lack of regulation in terms of affordability checks, the ability for consumers to seek redress. So we've been really pleased that the Treasury is intending to tackle this issue and to introduce regulation that would address those issues, and it's really important that it comes in as soon as possible to protect people.
Yeah, I mean, absolutely agree with that. I think there's a sort of issue around the transparency of some of those being finance options. So, for example, our research found that 28% of people who'd used buy now, pay later on websites actually hadn't realised that they were using buy now, pay later. They thought it was just kind of a payment option that allowed them to pay by instalments. They didn't necessarily link that with credit. And I've also seen another piece of research which showed that 72% of businesses who allowed purchasing through buy now, pay later saw an increase in sales conversions, and half saw an increase in the value of those purchases as well. So people kind of may spend more, and also more than they can maybe afford, and also not necessarily understand that there's a link with credit. And as Sue said, buy now, pay later isn't currently regulated. We also support moves to introduce regulation in the space. There's definitely kind of some work to do there.
Were you seeing that in football?
Not for match-by-match tickets. For season tickets, there has long been a sort of instalment plans of different clubs do them in different ways. I mean, the way that ticket prices for individual matches are going, maybe they might need to have to do it, but not yet.
Not well. So I think there's a long-standing tradition of people paying off their holiday over the course of a year, and that's quite important, I think, from an inclusion perspective, because some people are able to sink the cost of a holiday in the month that they go. Some people need the support in spreading those costs over the 12 months. The points that you made about making sure that if that is done on a credit or credit-like basis, that it has proper consumer protections and visibility about what it might do to credit scores is all very important. I think it's probably less likely that people are buying their dinner in that way, probably. Although I think we would all recognise that there are broader social challenges about supporting people who have challenges around things like alcohol, and in making sure that they're not incurring debt as well as other challenges, which are really deeply important. From a policy perspective, I think what I would probably say is that in responding to it, it's very important that you don't make it impossible for people to book a holiday in a way that allows them to spread the cost, but rather support them as consumers in not excessively extending themselves and doing that.
Just a quick follow-up, Anne, if you don't mind. You're a member of the Government Launch Financial Inclusion Committee, which considers these issues, particularly buy now, pay later. How much engagement have you had with the CMA and the Department for Business and Trade on this issue?
Not a huge amount on this specific issue so far. That committee's still pretty new, and we're kind of waiting to make some progress on that, but definitely would look to make that part of that process.
Okay, thank you. Charlie Maynard.
Thank you. A question to Sue to start with. So the DMCCA Act comes in April, and and over time, lots of good tools in that toolbox. The chair of the CMA left 2 weeks ago rather quickly and has been replaced by the ex-head of Amazon UK. What confidence do you have that the CMA, which is ultimately the enforcer of that new act, is actually going to be acting and using its teeth?
Well, we were surprised at the departure of the chair of the CMA. We had a constructive relationship with him and we're pleased with the way that the CMA has been focusing on consumer protection as well as using its competition powers. We'll be wanting to work closely with the new chair to make sure that the CMA maintains that dual focus. And as you mentioned, I think the DMCC Act is a really significant change in terms of consumer protection because the CMA will have the ability to take direct enforcement action from April. And so we want to make sure that it's making effective use of that new regime to be able to hold businesses to account, which is beneficial for responsible businesses as well as for consumers, so that consumers can have confidence and businesses can have certainty. The Act also enables the Secretary of State to update the list of unfair commercial practices, so practices that are always considered to be unfair. There's a broad range of provisions, including around misleading omissions or misleading actions that I mentioned before, which we think some of the dynamic pricing and certainly, well, we feel that the Ticketmaster Oasis situation fell under that category. But we think that where there is a need to update the legislation, the Secretary of State should be using those powers to update that list of banned practices. But I think more generally, as I mentioned before, I think the DMCC achieved a lot, but one of the things that it hasn't tackled is the vast amount of consumer enforcement that is carried out by trading standards departments within local authorities. We've just done a massive freedom of information request because there's no centrally held data about how trading standards departments are functioning and which aspects of consumer law they enforce when they enforce about over 200 pieces of law, and it shows it's incredibly patchy. So some London boroughs just have one trading standards officer. So that's something that, you know, we can have the best legislation in the world, but if it's not being effectively enforced, it's not going to serve consumers or businesses.
What would you like to see changed at trading standardisation geographically? What's your recommendation there?
Well, we think we've got the CMA with its new powers. It needs to use those powers, but it can only intervene when things are generally precedent-setting or market-wide. Trading standards deal with a vast amount of enforcement, including for national and multinational businesses. So we need to review the situation, make sure that we've got the right balance between what happens centrally and locally, and make sure that we've got the right specialisms across the landscape to deal with the types of risks that we're seeing now.
Okay, I'm afraid that brings us to the end of this panel. We are out of time. The clock is against us. Thank you so much to all of our witnesses for giving us a flying start in today's inquiry. We're really grateful to you for the clarity and the force of your evidence. That concludes this panel. Order, order. Order. Welcome to the second panel of our hearings today. Mr. Parsons, thank you so much for joining us. We're really grateful for you sparing us the time today. We on this committee are conscious that there is an ongoing CMA investigation underway today. We have not sought a sub judice waiver to get into the details of that investigation, so we will confine our questions to wider matters. Let me just start, though, with the first question which I must ask you, which is Ticketmaster basically ripping off fans who just want to go and see the shows they love?
No, I don't believe so, no. The services that we provide, we work closely with event organisers to be able to sell tickets at the prices that they've determined in advance and after lots of consideration and lots of thought. I don't think anybody should think that any, be it an artist, event organiser, theatre show, whatever it may be, hasn't gone into that without a tremendous amount of thought as to what that price may be. It's obviously one of the great levers that they have in terms of being able to sell tickets and make sure that they are able to fill the rooms that they need to. And they're also very much invested in the long-term careers of artists to ensure that they can go on touring on the road where they make a majority of their money now, outside of where that would have been recording. So I think a lot of thought goes into it, and I think they're in the main very fairly priced.
So when we look at the ethical statements by your parent company, Live Nation, we came across the Fair Dealing Code, and it says we're committed to maintaining the highest levels of integrity. Do you believe your firm here in the UK is living up to that standard?
I do, yes.
You also then said to the DCMS Select Committee in 2018 that ticket scalpers have sometimes left fans duped out of thousands of pounds because they do not know the cost of a ticket until they get past the transaction page. Are you now not guilty of the same sin?
I mean, I'm pleased that you've raised the resale point, and we're greatly encouraged that the government has elected to take on this issue. Do please remember that in those instances, any of the money which is being made, as I'm sure is aware but bears repeating, any money that's being made in those circumstances from touts being able to access tickets and taking them away is going to touts. The prices that we make available to fans, and do bear in mind that around 90% of the shows that we're selling don't actually sell out. So I do think it's good context to be considering the fact that the shows that we're talking about in this area are actually quite the minority of shows which are available at any given time.
But I think the sin that you were criticising back in 2018 was the reality that many fans didn't understand the final price that they were paying until they got past that initial transaction stage. And my question to you is, you're doing the same thing to fans today, aren't you?
I do think it's different because the resale sites will tend to...
How's it different?
Sorry?
How's it different?
I was just about to explain. I think one of the main reasons that it's different is that those resale sites are occupying, in many instances, the top of Google. They're dragging consumers directly in without any knowledge that they are not even the primary seller in most instances. And I think that's the area, you'll have to forgive me, I can't remember the exact quote and what I was talking about at the time, but the thing which we think is highly dubious is that they can purport to be a legitimate seller for that event and indeed use language to that effect in many instances that they're in some way an official seller within adverts when they are not, and that price is not the price which the artist has determined should be made available for sale.
Well, if we look at the recent BBC investigation into Ticketmaster and in particular the Harry Styles tour, the BBC heard from one fan who said that they'd been enticed on to buy a ticket at £155. When they got to the checkout, the price per ticket had gone up to something like £386. That's the same sin that you were criticising the scalpers for. It's a bait and switch, isn't it?
I don't think it is, no, because we don't advertise prices in advance, typically. The price that you see on our website when they are made available for sale is the price that the artist has worked with us to determine is the price that they want it to be set. I do think
how does it go up once you get to put your credit card in then?
Well, it doesn't. I do have to sort of talk to. Maybe it would be useful if we actually talk to how our platform does work.
Well, just explain. I'm happy to come on to that, but just explain to me how a Harry Tiles ticket for 155 quid ended up at 386 quid by the time it came to checkout.
Yep. Well, it doesn't change. The price that you see is the price that you will end up paying.
It looks like it's changed.
Sorry?
It looks like it's changed. It looks like it's gone from 155 to 386.
Well, it
looks like quite a big change.
It didn't change, and I'm happy to explain to you how and why. So many instances where dynamic pricing will be referred to, and I'm sure there will be many instances where that's come up earlier today in the discussions that you've had, relate to technology which is in some way reacting to market, surging on demand, driving tickets up based on relative to the amount of traffic that there might be on the site. I do think we can be quite clear that's not how the Ticketmaster website operates. We don't change prices in any automated or algorithmic way. Prices are set in advance with event organisers and their teams at the prices that they want them to be made available. I think in certain instances, because of that fact, some of the cheaper tickets which may be available will inevitably sell through most quickly, meaning that the tickets which fans see at a later point will be at a higher price, which can give the illusion that those tickets have changed price. But they have not. We can be very clear that there's no technology that's driving any price change, and the price that you see on the Ticketmaster website is the price that the event organiser wanted that to be, including all fees, and that's the only price that we will ever display.
Let's take a different example. Let's take Paul McCartney's got back UK tour. Again, the ticket prices were originally billed at between £30.95 and £182.95 for standard options. But fans have been sharing screenshots of ticket prices that go up to £429 to £592 for the show, which is on Sunday, the 15th of December 2024. I mean, that looks like another case where the ticket price has suddenly changed by the time it gets to check out.
So, as I say, all prices are set in advance in conjunction with the event organisers. They're not changing. In fact, in most instances where prices do change, because they will over the life cycle of an event, they actually tend to go downwards rather than up, as the whichever event it may be needs to ensure that the event is selling through at the rate that they would need. I do think I would like to repeat just briefly, if I can, though, that I understand why. I very much understand why we are here and why there is the interest in the top level prices, which do capture so much of the headlines. They are a small minority of the shows that we're selling. In fact, some research that we've done does show that around 75% of the tickets that we're selling at the moment overall are under £35. So I think it would be misleading to take the view from this that in some sense that all tickets are in some way overpriced.
Well, we've got a couple more examples, I'm afraid, because Lana Del Rey 2024 tour, 90% of tickets were fixed price between £70 and £162.50. 10% of the inventory was sold at what was called a platinum level, where the prices were 2.5 times the face value. And other reports said that standing tickets went as high as £400. So again, it does seem on the face of the evidence that the price has been changing quite a lot over the course of the process.
As I say, I mean, the prices, the range of pricing is familiar to me. I'm quite sure that that's right. I think the point that I'm trying to make is that those prices haven't changed. There's no technology-driven change to those prices. They're the prices which humans have agreed to. There's not a computer or a bot behind it. There's prices which have been agreed, communicated, that a great deal of thought will have gone into as to how and where they should be at, and they are set and changed by humans. I think it's also. I mean, you mentioned the resale marketplaces.
Just want to unpack that. You said that the price has been changed by humans, so it's not necessarily an algorithm that's driving an increase in the price. It's Ticketmaster employees who are jacking up the price as the demand rises.
It's very, very rare that a price would change during an on-sale. We actually work to the view that shouldn't happen. Sorry?
I seem to have found quite a few examples.
Where the price, as I say, that would have been agreed in advance. It's not a price which will have been changed on the day. It will have been agreed with the event organisers and teams. And I do think it's important to understand why those prices do sometimes reach those levels that they are, because what we're effectively talking about here is different tiers of pricing which can operate at any given time. There's plenty of evidence to suggest that if we're not able to be capturing that value, which the artist is doing in those instances, then that money is just going to go and the tickets are going to be captured and gobbled up by touts and made available on resale sites within minutes of an on-sale in many instances. And when that happens, it's bad for fans. It's continuing to build out this secondary business, which makes no input back into the creative industries that nobody benefits from. And we think it's absolutely right that artists should be able to price a small amount of the tickets at a higher price to be able to keep overall prices down and to be able to capture some of that value away from the secondary market.
But if we take some artists who want to keep their prices down, like Robert Smith from The Cure, he said that he was as sickened as you all are to his fans over Ticketmaster's fees. He said that they'd sought to keep their prices down to about 16 quid. But people were sharing screenshots of Ticketmaster's shopping baskets with fees that were higher than the ticket prices themselves. So even where you've said that your ticket prices remain stable through the transaction process, it would appear that some people are getting a nasty shock with all the fees that are lumped on in the end.
I mean, all I can say to that is all of our fees, are absolutely clear right the way from the outset, as they obviously should be. And that there are no surprises in that regard, and that any fees which are agreed in what is a very competitive market are set in conjunction with whomever is making those tickets available to us. And that Ticketmaster, yes, we are retaining elements of that, but we don't retain all of that fee base, whatever it may be.
Well, but that would imply that artists like Neil Young are wrong. He said last year that artists have to now worry about being about ripped-off fans blaming them for Ticketmaster add-ons and scalpers. Concert tours, he says, are no longer fun. Is Neil Young wrong?
I think I don't want to accuse Neil Young of being wrong about anything, but it's not something that I think is a... If I look at our average fee base within the UK, and we have done some analysis on this just recently, an average per ticket fee within this country for a concert ticket is around about 11% of the face value. I think we can all agree that's probably pretty reasonable. There are a number of instances where there are other add-ons. I think sometimes things such as venue facility fees will get conflated as part of the overall fee base. We don't retain any of that income. I think at the fee base within the market is very, very reasonable.
Well, it's said that Ticketmaster introduced dynamic pricing in 2022. If we look at the Live Nation accounts, we can see that in the 1 year thereafter, adjusted operating income on the ticketing business grew by £83 million in 1 year, and the margins soared, not from 11%, the margins soared to 40%. That sounds like profiteering, doesn't it?
I mean, I will have to repeat that Ticketmaster doesn't set the prices. And
you just said the average fee, transaction fee in the market was 11%, but actually Live Nation's operating unit for this business is operating at a margin of 40%, 4 times that.
The 11% is a number relating to the UK business. You will forgive me. I am going to speak as managing director of the UK as that UK entity. I think overall, if I look at the cost of ticket prices within the business as a whole at the moment, they're actually genuinely very, very reasonably priced. If I look at how costs have increased,
it's not what many of your fans would say.
I'm sure when there is, as I understand, a lot of interest and focus and attention on that real top tier. If we look at arena ticket sales within the UK, arenas being the big productions, what most people will associate with with that concert experience, ticket prices from research that we've done have actually only grown around about £5 since 2018 on average, which in an environment where inflation is far higher, the cost to production, the cost to actually delivering these shows, which are hugely beneficial to the economy, I would add, given that on average around about £150 is spent by every fan who's attending one of these arenas. The actual cost to attending the shows has actually remained very static in real terms.
Well, what we want on this committee is the assurance that Ticketmaster is not behaving like a bunch of sharks and just profiteering and we want to now get into some of the questions around dynamic pricing and whether dynamic pricing is basically exploiting a position of market power that you've built up through ownership of many parts of this value chain. But let me turn first now to Joshua Reynolds.
Thank you, Chair. Mr. Parsons, you've compared Ticketmaster's approach to dynamic pricing as similar to airlines and hotel rooms. Could you explain to me very clearly the similarities between a concert ticket and a hotel room?
I don't think I would. Prices vary, and I think in any sort of, functioning market, there will be instances where prices go up and go down. In my experience, they're more likely to go down than to go up. The industries that you spoke of just there, though, I do want to be clear once again, because I think it does bear repeating. We don't operate in the same way, don't use the same technology to function in the way that they do. There is no automation relating to price changes.
You said specifically, and your words were, that the Ticketmaster's approach to dynamic pricing is similar to airlines and hotel rooms.
When did I say
that?
That
was the words of Ticketmaster.
The words of Ticketmaster.
Yes, and you are the managing director of Ticketmaster.
I am, yeah. I don't remember having said that. I thought you were implying that I'd actually said that. I think that there probably was a period of time when it was useful to be able to make the association between the two, but I couldn't be clearer. We don't operate technology that operates in the same way that those type of services do interact with pricing. That's not how we work.
Would you say then, if you were looking at a dynamically priced ticket, does Ticketmaster make more money off a higher dynamically priced ticket from its original face value to what it might end up being? Do you make more money off that than a ticket at face value?
The money that we earn varies contract to contract, deal to deal. Some of them will be fixed price. Some of them might be, as I think you're alluding to, might be based on the price as a whole. So it varies would be the answer.
So you would say that there are a number of tickets, there are a number of contracts that you would have with artists where you would say a dynamically priced ticket you would make more money on than a fixed price ticket.
Well, we don't contract with sort of a bit of a kind of a point of probably a not useful point, but we don't contract directly with the artist. We contract with an event organizer. But yeah, in certain instances, we may operate off of a percentage base. On some instances, it might be fixed.
Okay. Last Week Tonight host John Oliver.
Say again, sorry?
Last Week Tonight host John Oliver has recently described Ticketmaster as one of the most hated companies on earth. As the managing director of Ticketmaster UK, why do you think that is?
Why do I think that is? I think it is because we have the great pleasure and joy of being the thing which connects fans with the thing that they love the most. And that creates a tremendous amount of passion, which means that what helps us all be able to come to work every day. That's why I enjoy working in the environment that we do. But it does mean that if people are not able to access the things that they love, which when supply and demand comes into play sometimes is going to be the case, I do think that will generate, unfortunately, some ill feeling that we live with.
Do you think just not having the correct amount of supply would make Ticketmaster be, as this quotes, one of the most hated companies on earth? Ill feeling is very different to hatred.
I think if fans were always able to get the thing that they want, there would be a quite different environment. Yes.
Who decides when dynamic pricing is switched on?
So as I say, the decisions relating to any price, and we don't control price. So I think I'm hopefully repeated enough now to be able to get that across at least. Where differing price tiers will be made available, that's a choice of the event organizer, and we work with many artists and events of all various types who are very happy to work from just a single tiered price. We also work with others who want to be able to try to be able to combat resale, to be able to be capturing some of that income away from resale and bring that back to the creative industries or the event organisers. So it varies is the answer, and it will be in the build up to an event and tour going on sale.
But so you say the approach varies. does that mean that sometimes it's not the event organiser that takes a decision on when to switch on dynamic pricing?
It's always the event organiser.
It's always the event organiser, okay. And how does that actually work in practice? Does someone just push a button on your Ticketmaster master control system that says dynamic pricing?
No, as I say, I mean, over everything these are prices these are decisions which are made in advance, where certain tickets are quite literally predetermined to be set at a price that might vary to a different price in advance, so that at that point of on sale, they're able to be released with the varying prices that have been determined. I would just add to that as well, because we're sort of talking about the build up to and how this comes to be. We're not sort of completely removed from this in that we are trying to be able to help event organisers of all types be able to make the right decisions. Everybody wants to get the price right. They want to be able to be selling the price that works for them, that makes the event viable, that makes that we're a fantastic destination, actually, the UK for touring. So everyone's trying to make the right decisions to be balancing all of those things. And we do play a part in trying to be able to help them, to be able to have the insights and the knowledge, and to be able to guide what that price be, so that it doesn't have to change. If you're having to change a price, actually, you sort of got it wrong in the first place. We want to be able to help them to be able to have as much knowledge as possible to be able to get that price right in the first instance.
What's the difference between platinum pricing and dynamic pricing?
Platinum is the brand name, if you like, that we use to be able to have a different tier of pricing relative to the other more standard pricing. The tickets are tickets. They're a way of being able to have that different tier of price to be available.
I wanted to understand the journey from the point at which tickets go on sale to the point at which you, hopefully, for these particular arena shows, achieve sellout. Am I right in understanding, and you'll correct me if I'm wrong, that there is a plan for the prices at which different tiers of tickets will be sold in the course of that sale period? You hope not to have to change, but do prices change during that sale period from their initial advertised price based on triggers about the behaviour of consumers during that period? And is that part of your plan in advance?
No, they do not change based on any triggers. Right. They, as I say, more often than not, where a price will change, it's more likely to be downwards over the ongoing cycle of an on sale, because people have been a little perhaps too optimistic as to what that might be. And bearing in mind again that 90% of the shows that we sell for don't sell out, it's more likely that they're going to need to go down than they are going to need to go up in most instances.
You'll understand there are some raised eyebrows around the table. What you're saying to us is that there are a suite of advertised prices at a range of price points, maybe according to the extras that have been added on or position in the auditorium, those types of factors, and those prices remain the same throughout the sale period. It's just that some prices may sell out, so only the more expensive prices may be left when people reach the checkout phase. That's what you're saying?
It is, yeah. I mean, there will be instances where people will want to be able to be, where event organisers would like to be able to be changing prices, but we strongly urge them not to be doing that during any sort of high demand on sale period where people are queuing.
You urge them and sometimes they ignore you, or you urge them and they don't do it?
I genuinely can't think of any instance where we've had any resistance to that in the. I'm trying to think of a period of time that I can year. It's not something that people tend to want to do.
You'll understand that we on the committee have a number of testimonies from people who have attended or sought to buy tickets for various concerts and events where they feel that they have evidence of prices changing during that purchase process, and you're saying to us that that just doesn't happen.
I'm saying that the prices which are set are preset prices. The price doesn't change. Some of the lower prices will no longer be available, leaving higher ticket prices then available for fans who are joining later.
Okay, thank you.
Yeah, we're going to have many confused fans. Sonia Kumar, very briefly.
Thank you. You said the 11% is the fee that you, on average, actually present. Is that correct?
That's we looked at the averages, the booking fee. So this is it's a face value, and there's a charge which is placed on top, and that's the average fee.
So what's the top limit that you have on a fee? So 11% is the average. What's the highest fee you would charge?
I'd have to come back to you on what the highest one is. I wouldn't like to speculate on what the highest is, but it's probably around about 15%, I would think, or something to that effect, as a per ticket.
Would you
fee.
be able to give us written evidence
Yeah,
to see
sure,
and
no
show
problem.
the data? Because it just sounds like what the committee's coming back with and the testimonies that we've had. It sounds like there is a discrepancy in terms of how the fees are being put in. And you're saying it's only 11%. I understand on average your ticket is only around £30, but there must be something going on in this period of time of them pressing their button and then getting to payment, that their fees are going up. So I wonder whether there is more than 15%.
I mean, categorically, there's no change in fee from what they'll see from the outset will be the fee that they'll be charged all the way through. There are a range of fees. That's the average. By definition, there will be some fees which are higher on that basis. I think where the higher rates, I can't remember the number that I think you said was something like 20 or 30. I can't remember what the number was.
Well, the operating margin on your parent company is 40%.
Sorry, not that. The fee that I think was being talked about earlier. Anyway, I think in certain instances, different charges which are being levied, be that a venue facility fee, for instance, that may be being added to that we don't set or take or have any position in. When it comes to the final amount of fees which a customer or fan is being charged, they'll see all of those fees together.
Okay, we can check that with John by way of follow-up. Thank you. Matt Weston.
Thank you, Chair. Mr. Parsons, in your opening remarks, you said that Ticketmaster doesn't rip off its customers. I'm sure music fans around the country hearing that will be very surprised to learn that. In fact, you may be aware that amongst many fans, the company is referred to as ticket shysters. It's not a term that I am familiar with personally, but is that something that resonates with you? Why do you think that would be?
As I think I mentioned to the committee earlier, I think it's a very passionate industry that we work in. People feel an incredible closeness to the artists that we understand, that we respect. And we work very, very hard, tirelessly, in fact, to ensure that we're able to provide a safe, secure environment where fans are able to purchase their tickets.
Okay. Just interested to know what information the company uses when determining its price. What data would you use to help you establish the price for that particular consumer?
Again, I'm guilty of repeating myself again, but we don't set the price.
You set a base price with the venue. You've explained that. You set a base price.
We don't set a price. We are instructed on a price by the event organiser. We, in certain instances, will help them to be able to take a view on what that price may be based on signs of what the level of demand might be, the amount of traffic.
It's semantics, if I may say. We're getting bogged down in semantics. Between you and the venue, you establish a price, let's put it like that. And then you have other prices that seem to come into play according to demand. I'm interested to know what data helps drive the movement in price during the period those tickets are available for sale.
You'll forgive me, it isn't semantics to be saying about who is setting the price. I do think that's one of the things we do need to be really clear on.
Price with the venue.
We're instructed and given what that price will be. I think it is a clear distinction.
It's not a discussion, it's a one-way conversation.
Sorry?
It's a one-way conversation.
Yes.
They say, Mr. Parsons, the price is this, no negotiation.
Or the face value of tickets, yes.
And they tell you what the top level price is, the platinum price?
The event organisers, yes. We're making decisions that are made with the event organisers at all times, yes.
You are making decisions with the event organisers. That's what you're now saying, is that Ticketmaster are making decisions with the venue. That's what you just said.
The event organisers are making the decisions relating to price.
You're correcting yourself. Anyway, the point being, when it comes to driving the price, the consumer sees the price moving, is there any use of consumer data, cookies, etc., in establishing the price for that particular consumer?
No.
In resale markets, whether the companies are owned or not by Live Nation Entertainment, does the pricing in resale markets have any influence on the price of the dynamically priced primary sale tickets?
I mean, in my experience, they will always typically far exceed the prices which are available within what we would call the primary market, the first instance of tickets where tickets have been set and been priced.
But are they linked in any way to any algorithm?
No, they are not. No.
Okay. So just to be clear, there's no user information such as prior purchasing patterns or demographic used in setting dynamic pricing?
No.
Okay. Ready writing.
Thank you, Chair. So we've heard from upset consumers about the process that they've been through when purchasing tickets on Ticketmaster. So my question is, what is the argument for allowing event organisers to use dynamic pricing that retail through your platforms?
I think there are a number of reasons. One, we spoke to just earlier the fact that actually the relative cost for the majority of tickets is actually pretty low, consistently under inflation in an environment where costs continue to rise all the time for the delivery of those. So that a small amount of the tickets might be able to be being priced at a higher price tier seems fairly reasonable to me. I think on top of that, there is this ongoing challenge which the government has recognised and is seeking to be able to take on, which is that where tickets are underpriced relative to what the market shows they could otherwise be sold for, then touts and brokers and resale sites will take advantage of that, and that money will go elsewhere. We think it's right that we support event organisers who want to actually take a position in that and to try to be able to ensure that that money is captured and doesn't go into a burgeoning resale market.
Would it not be fairer to advertise the premium prices of the tickets to the consumers initially, so when going onto a website they can think about and budget for how much they expect a ticket to be?
We have made some changes to how we actually show prices within queues, and I think that is one of the things that we can do, is try to be able to make sure that the price is shown earlier. We'll all benefit from the fan actually being able to make a decision as to whether or not they are interested in paying the price which is available, is going to be available to them. I do think it's worth bearing in mind again that this is a small proportion of the events at any given time that we are talking about. I've mentioned before that 90% of the events are not actually selling out that we're selling for. So this is a small proportion of the shows overall that we're actually focusing on.
I think it's a small proportion, but a lot of money still. Thank you.
Hi, good afternoon. I just want to ask about market share here. So on venues, festivals, and then top venue box offices, what do you estimate your market share in the UK to be in those two spaces, festivals and top box offices?
I wouldn't like to say, but I'd be happy to if we can provide some further.
I'm going to read you the market shares that I understand.
Okay.
Just Google stuff. So on festivals, back in 2018, you had more than a quarter of the market share in the UK. Venues, 46% of the top 61 venue box offices in the UK. Does that sound kind of unlikely, likely, roughly on target?
It seems somewhat. It seems high to me, but.
Okay, right, thank you. On ticketing, our data says 40 to 50% of the primary ticketing market, and that you own 2 of the top 4 secondary ticketing companies in the UK. Does that sound accurate?
No, we don't own any secondary ticketing companies.
I've got Get Me In and Seatwaves.
Were both closed in 2018.
Right, okay, well that's helpful, thank you for that. So nothing in the secondary market. In the primary market?
is as competitive as any market in the world, I think. And I couldn't give you a share, but whilst we may be the largest, we certainly have no. There's incredibly competitive business that we operate in. I look at the arenas that operate within the UK. I think we provide ticketing services for maybe 3 of the largest arenas in the UK. We have a less than 50% share of the major buildings.
Look, from the outside, what it looks to me like, so let's say these numbers are correct. So festivals 25% or more, top 60, 46%, ticketing 40 to 50%. You've got massive vertical integration and dominant market share between operating the venues and running the ticketing. And to me, that's something that looks like something the CMA should be looking into and doing a market investigation into. Don't you think so?
I mean, that's not something that I recognise. I'm here as the representative for Ticketmaster within the UK. We have clear divides between how we operate on a daily basis, and as I say, I think it's an incredibly competitive market within the UK.
You don't recognise those market shares? You think those are just wrong?
I don't operate in that business. I don't work in that side of the business, so I genuinely don't know whether those figures are right or not.
Okay, thank you.
Is there any possibility that venues, event organisers, artistic management that may be owned by Live Nation are negotiating with you about ticket prices?
Could you repeat the question?
So your sister company, Live Nation, is also in this line of business. And what we're trying to understand is that whether another part of your group owns assets like venues, like event organisers, that is working with you to set prices.
Where parts of that business are the event organiser, which they will be, as you say, in certain instances, then yes, they are part of what will be determining the price, albeit in conjunction with artists with whom they have to agree and make those decisions with. But we're somewhat one removed from that. We take instructions from the event organiser, who, yes, could be Live Nation, could be obviously a whole multitude of other parties.
Let me just make sure I've understood this. So one part of Live Nation could be negotiating with another part of Live Nation about what a ticket price ought to be.
Not negotiating in that sense. They are the event. They will be the event organiser in certain instances. That is their role in the market.
Well, let me rephrase it then. So one part of Live Nation could be dictating the price to another part of Live Nation.
I think that
sounds like a conspiracy.
I don't think it does. I mean, in those instances, they're not making. No event organiser is making the decision in isolation. They're making it with a whole bunch of other stakeholders who come together to be able to make any event happen. And obviously, the artist is a very key decision maker and stakeholder in that discussion.
So in order to understand Live Nation's market share in event management, event organisation, event promotion, artist management and venue control, we would need to speak to your colleagues in Live Nation.
I can't speak to the market share of that business as a whole.
Okay, thank you very much. Gregor Poynton.
Just to follow up on that point, then, do you think then that structure that Mr. Byrne has just outlined might be part of what is driving that huge increase in margin that Mr. Byrne outlined earlier in the evidence session?
I think that there are many instances of. I'm not really sure what to comment on in that fact. I don't see the impact of that. I see a very well-functioning, competitive market that takes place every day, and we operate at a degree of separation from that rest of that business, and operate with them as we would any other event organiser or partner.
Could you outline what that degree of separation is?
That we have our own that we are our own separate business. We have our own reporting lines we operate separately from.
So there's no collaboration within that Live Nation group?
There is no collaboration in any more of a sense than there would be with any other event partners that we operate with.
Okay. Sarah Edwards.
Thank you, Chair. I just wondered, obviously, we've asked many questions and spoken about dynamic pricing, which you said that you don't do. But what I'd like to understand more is about how the queue is operated when tickets go on sale for really popular artists, because that seems to be where a lot of this information is coming from that point where somebody has been successful and chosen their ticket. Can you talk to what technology is being used to assign people the opportunity to purchase? How does that work? Is that an algorithm? Has that got data behind it? And then what's happening during those minutes where people are waiting? Because, for example, I was just having a look on the website and it's a 12-minute purchase window for a ticket where I'm not in this expectation of purchasing. They're there, they're clear, I can see that. But if I'm waiting to try to be able to purchase a ticket, that's where there's a lack of transparency. Are you able to provide more information on that process?
So when you, if there is more of a, and again, bear in mind it's actually a very small number of events that actually do need to have a queue, but the queue is a necessity in certain instances because of the level of demand and bots that are attacking us at any given time, which will be into their millions. That's sort of the reason behind, that's why there needs to be a queue in certain instances. Where there is a queue, we have what we call a lobby area, which is sort of a waiting area before you do actually enter the queue. When you enter the queue, you are made available of where your place in line is and how long, what your position within that queue will be. There's no algorithm as such. You have your place assigned to you. And then you reach the end of the queue and then you have the opportunity to shop and be able to see the full store which is available. So the queue is there to be able to protect the access to the shop to ensure that it's able to function in the way that we need it to, so that fans are able to make decisions based on location and or price to be able to find the ticket that they want.
In the time from when they then select that ticket to when they go through to purchasing, which I assume might be that same 12-minute window, is there a likelihood that the ticket they chose is sold out and therefore where they get to the end, a substitute ticket is put in that might be higher?
No. So I think that's a really good point that you raised. So no. And what's happening at that point in time is that the ticket which they have been able to access, that was made available to them at that price, is then held for them. And it's for that reason that we have the 11 minutes that you refer to, because that ticket is on hold during that period of time. In certain instances, we have bots and attacks that actually quite deliberately hold tickets in that way. We call it a denial of service, where they're able to try to be manipulating the market so that fans then actually have to be purchasing from the resale marketplace where tickets are not being held. So the 11 minutes is a necessity because that ticket is actually being held at the price that they wanted during that period of time. They can go backwards again, but the price is held at the price that they selected it at, and there will be no change to it.
Okay, thank you.
Thank you.
Thank you. What's your thoughts on capping the resale price of a live entertainment ticket?
So, as I think I mentioned earlier, we greatly welcome the government seeking to be able to take a position here. It does inflate prices to the rest of the market. It does have a negative impact at that initial on sale, at the primary on sale, where it's creating all the pressures and steps that we have to take, like the queues, that lead us to have these steps to be protecting the site. So we absolutely think that there should be steps taken to be capping that price. We operate and have done since 2018 our own resale site. We shut down, stopped market price selling and operated off of a price that you paid model, so it's the price including any fees that you might have. I know that the submissions, I think, categorise them in different subsets. 30% is definitely too high. 30% still gives the opportunity for touts to be able to be running a business in that manner. So we don't think it should be that. We're still debating it at the moment. We think probably the 10 to 20% number offers some flexibility for fans, perhaps. but we're still reviewing it at the moment. But there should be a cap, yes.
Okay. Well, look, Mr. Parsons, that's been incredibly illuminating. Thank you very much indeed. I think there will be many people who are still left somewhat mystified by their experience of using Ticketmaster, but you've given us some great insights into the way that the business operates, and we're really grateful for your time today and for your evidence. That concludes this panel. Order, order.
Thanks.
In our inquiry today. Mr. Manners, we're incredibly grateful to you for joining us today and for your patience. David, George, do you want to just introduce yourselves on the record, David?
Yep, David Marshall, I'm Deputy Director excuse me, in the Department for Business and Trade, responsible for consumer protection.
Perfect. George?
I'm George Lusty. I'm the Interim Executive Director for Consumer Protection and Markets at the CMA.
Great. Just before Mr. Weston opens the questioning with Minister Madders, Mr. Lusty, can I just ask you about the CMA report back in 2010 that concluded its judgment on the merger of Ticketmaster and Live Nation? And you'll have read it, no doubt, ahead of this session, but I want to draw your attention to this sentence where it says, "We found that the merger of Ticketmaster and Live Nation was unlikely to result in a substantial lessening of competition in any UK market." Is that judgment a mistake in retrospect?
I think the way that merger control looks at particular dynamics of markets has to be taken at the point in time, and that was the adjudication of the CMA's predecessor body at that moment in time. I think you have to look at every proposed merger in light of the circumstances that prevail. My role in particular is looking at consumer protection aspects, and as you're aware, we've had a broad programme of work, particularly looking at issues in the ticket resale sector, which I'm very happy to come on to, and the CMA's recommendation. And more recently, obviously, have a live investigation in relation to the circumstances of the Oasis Reunion tour ticket sale as well.
I mean, this is a business that's got an operating margin of 40% on its ticketing business, and that's a margin that's doubled. I mean, that shows that competitive dynamics don't appear to be functioning terribly well.
So the particular focus of the work that I've been leading at the CMA is really on that sort of core consumer protection area, whether people are being treated fairly, that they can trust what they see. And that applies to any trader irrespective of their market power or size. And that really is the sort of the sole focus of that investigation that we've launched.
Are consumers who use Ticketmaster being adequately protected today?
So I can't talk specifically about the Oasis Reunion tour investigation.
They sell many other tickets.
And indeed, we don't comment at large about sort of whether any particular trader is complying with consumer law. What we expect, though, under the general law is that people can trust what they see, that they're not subject to misleading actions or omissions as they go through a sales process, that they're not subjected to undue pressure or aggressive sales practices, and that they are treated fairly in the terms and conditions that bind them.
We were just invited to believe that one half of Live Nation in the UK doesn't coordinate, collaborate or conspire with another part of Live Nation in the UK to set ticket prices. Do you believe that?
I think if we're talking specifically about the behaviour of Ticketmaster or other parties in connection with the Oasis Reunion tour, I need to be very careful because that is an ongoing investigation.
That case
as part
aside,
of which,
but what about the rest of its business?
I really am not well placed to comment on that. We've looked sort of through the particular prism of this investigation using our consumer protection powers.
Mr. Weston.
Thank you, Chair. Minister, you heard earlier in the first panel just about how important I think that consumer groups were saying transparency and predictability in market pricing is for consumers. How does the government plan to get the right balance between consumer protection and a fair and reasonable objective of profitability on the part of a provider?
Well, first of all, thank you for allowing me the opportunity to come speak today. I've actually found the evidence sessions earlier on fascinating from a number of different perspectives, but I think we would take the view, as you heard in the first evidence session, that dynamic pricing probably has been around for as long as there's been capitalism, and it was called something else. And what's happened in recent years is we've seen a real sort of speeding up of the way that it operates. Technology has been used to sort of effectively deal with this in real time in particular sectors. Obviously, we're looking at the live event sector in particular and how dynamic pricing operates in that. We're about to scope out some further research into how personalised pricing works as well, because I noticed one of the questions earlier on. There is a sense, isn't there, that something isn't always right, but I'm not sure we've got the evidence at the moment to support that assertion. But I think we come from a point of view, we want consumers to be empowered. That means that they have to have transparency, they have to have confidence that what they see on the website when they enter it is going to be the price they pay at the end of it. And certainly there are going to be significant new powers in the next month or so through the DMCC Act, which will help in that respect. And obviously the call for evidence is also going to be assisting us in understanding the scope of this issue.
Your point about sort of historically, I'm sure many of us would agree that there has been, and we heard from the hospitality sector, and I think you were in the room at the time, that there has been variable pricing, differential pricing on different day part or day part of week, and that's absolutely fair, but they're advertised. What we're perhaps getting into this is we're seeing dynamic pricing on steroids where it is variable by second. And that's the great difference, because it's not advertised. And I think that's really, I think, beginning to become increasingly clear from this session. I just wanted to look at the area of public bodies, and there has been some discussion out there about how we might see variable pricing, say, in energy, finance or transportation train companies. I think LNER might be talking about this. So how does government view this, and where do they think they're going to fall?
Well, DBT is responsible for sort of the overall framework, and the specific areas that you've mentioned are more for those particular departments in terms of how prices operate. But
we need some sort of a cross-government view, don't we?
Yeah, we do. And I think I start from the point of view, if I draw an analogy from someone who goes to a supermarket, they take something off the shelf, it says it's this much. I don't think as a matter of principle they should then expect at the checkout for it to be a different price, and for them to be told that they've got 20 seconds to make up their mind whether they wish to accept that or not. And in fact, if they don't accept that price, that's their opportunity to purchase that product gone forever. I think they're clear tram lines I would like to see as a basic starting point, but obviously in different sectors of the economy there are other approaches that will be necessary, particularly for things which have a wider social utility.
I mean, you've just described Ticketmaster's business model there. I mean, are you concerned about Ticketmaster's business model?
I would say, Chairman, the evidence spoke for itself in terms of the questions that were being asked and the answers that were being given, and I would be waiting quite interestingly to see what the committee's overall conclusions are following that, and clearly there is an ongoing investigation as well.
Mr. Weston.
Mr. Lusty, can I just ask, in terms of the work that the CMA is doing, how is your work sort of in terms of scope and compared to what the government is, and how do you think it's aligning?
So, alongside the Ticketmaster investigation, we've started our own project looking at dynamic pricing, the case for and against when it comes to the impact on members of the public, the impact on competition, and interestingly, going back to your question about sectors like rail. Rail is within the scope of that exercise. We've identified sort of 6 sectors where we're gathering information from businesses about the use of dynamic pricing. We're speaking to all of the UK's leading consumer groups with an interest in that matter and with academics as well. So the 6 sectors that we are looking at in more detail are airlines, rail, taxi, retail, events and leisure and hotels. And hoping to use that base of information to provide really useful information to, we hope, assist this committee, to also assist the department in its own review, and all of the consultations that the Minister has mentioned are ones that the CMA wants to contribute to and bring our knowledge to the table.
Just to be clear, is that you use the term dynamic pricing and you mean absolutely dynamic pricing? You don't mean variable pricing or drip pricing? Or are you looking at this in the round at all elements where there may be differences in price being offered to a consumer?
I think just pinning down a definition of dynamic pricing is genuinely very difficult, because at some level it is simply a price that responds to demand, but that could be said to some extent of all prices. We are looking, I think, in particular at sort of new trends in dynamic pricing and how well that is understood by consumers every day. And I think, as we've heard from this committee, there are some circumstances in which people are experiencing dynamic pricing for the first time and in a very different way, and it's combined with other practices that in combination could create problems. But we're looking at both sides of it, including the things that dynamic pricing allows businesses to do in terms of being able to enter markets that they might not otherwise enter, to be able to smooth demand, which in itself might help keep prices low. And so looking across the piece to be able to give a really informed input into government's decision making.
Yeah, sorry, I just want to jump in. Minister, thanks very much for sitting in on the other sessions. I think that's very kind of you. So, for the benefit of the other gentlemen, as per public information, so Live Nation Ticketmaster, 25% of the festival market, 46% of the top 60 venue box offices, 60% of event promotion market, and 40 to 50% of the primary ticketing market. So we've got massive market shares, massive vertical integration, and I'm not talking Oasis, because we're not talking about that today, but massive market abuse. And isn't that enough information to start an investigation? And if not, why isn't it enough information? What else do you need?
I think in particular, we're working through the parameters of this specific consumer protection approach. I completely accept that there are other ways that could be used with different tools that the CMA has to look at broader issues in the sector. I think at the same time that the government is calling for evidence and is consulting on consumer protections and ticketing generally, the way that we're intending to approach that is to feed into those consultations, give our view, bring the expertise from all of the enforcement we've taken in the secondary ticket sector, the recommendations the CMA made in 2021 for how that could be improved, and that's the way that we are approaching the issues that we see before us at the moment.
So I think if I'm feeding that back to you, and correct me if I'm wrong, that's no investigation soon into this company and its market shares?
There is no broader investigation at the moment beyond the Ticketmaster one and our broader response to those consultations and a project on dynamic pricing.
Do you think the CMA is just too slow to pick up these issues?
The CMA has got a broad programme of work across the whole UK economy, in particular trying to tackle unfair and misleading business practices. We've been incredibly active on cost of living issues in key sectors, groceries, housing, travel, and we try to...
I get that, Mr. Lusty, but is Ticketmaster just not a case in point that the CMA has been asleep at the wheel on increasing market concentration in Britain in a way that is much more pronounced than other Western economies, that has now left us really vulnerable to sharp practice and the use of dynamic pricing in the way that we've seen in the Ticketmaster case?
I don't think that's fair. I mean, the Ticketmaster investigation that we've talked about earlier was launched in a matter of days of concerns being raised about the manner of the sale of tickets for the Oasis tour. I think it's also important to note that we're still operating within our existing toolkit, and as other witnesses before the committee have mentioned, that is going to get a very significant upgrade in the spring. That will give the CMA direct enforcement powers for the first time, the ability to levy civil fines. That gives us substantially more leverage in how we are able to move our cases forward. We can directly order redress so that people get their money back, and that can be as the result of a direction from the CMA. And that really takes consumer protection law to a whole new level. It equalises the CMA's consumer protection and competition functions, and that will allow us to move forward with more impact at a greater pace as well.
I'll come back to this in a moment, but first, Rosie Writing.
Thank you, Minister. Thank you for taking the time this afternoon. We've spoken about on the panels that the government is consulting on a plan to cap price on resale tickets. While we're aware other consultations are going on in other regulated markets, such as energy, that may change or remove price caps, is there a risk that not having a uniform approach makes the UK quite a confusing place to do business?
I wouldn't agree with that. I think what we're looking at, particularly in terms of secondary ticking, is a very specific issue that has been, a source of frustration for many consumers up and down the country. I think it's very clear as well that it's subject to a level of price inflation that isn't really seen in other areas. It is a one-off event that creates a premium for that particular product, and people have took advantage of that to make excessive profits. And I think it's right that we look at what tools we've got available to try and tackle that.
Thank you.
Charlie Maynard.
Thank you. So I was very impressed to see the CMA's announcements in an investigation, I think it was February 22nd, into Google and Apple. I was concerned to see the chair having a very, very quick departure 2 days later. I was surprised to see the choice of an ex-Amazon UK's boss as the new chair of the CMA. And I've got a whole load of things here in terms of what the public had to say about that and what the press had to say. That words like foxes and hen houses were bandied around the public domain. What sort of message do you think those timescales and actions send the markets and the public?
I think it sends the message that we're open to business for international investment. You might say foxes and hen house. You might also say poacher turned gamekeeper. I think it's important that we have someone who understands the tech sector, because that is clearly an area that's going to be an incredible amount of the CMA's focus over the next few years. It's also fair to say that the individual has other jobs on his CV which aren't related to the tech sector at all. But I think the conclusion drawn was that our ambitions for growth were better met by a new chair.
Okay, but the CMA is about promoting and ensuring proper working of open, fair competition. Putting somebody who was in charge of a company which has got very strong, maybe dominant market shares in the UK, that messaging, yes, you might say that's pro-growth, but if we're going to grow our country, it's about innovation, and monopolistic practices crimp in innovation. And do you recognise that as a risk?
Well, look, I'm sure there are processes in place to make sure that there is no sort of direct involvement between individual investigations that might have involved companies that the new chair has been involved in previously. But as you've said yourself, the CMA have only recently just announced an investigation into Google and Apple. That does show that we are willing to take on big tech in terms of the way they're operating.
It would show it more if you didn't lose your chair 2 days later. Anyway, thank you.
We look forward to the confirmation hearings on this committee in due course. Sonia Kumar.
Again, this is to Mr Lusty. Your latest State of UK Competition report has shown how average level price markups at the largest firms. Can the pricing practices taken by businesses help to explain some of these differences?
I don't think the particular methodology of the report allows us to say with certainty that it's bound up with the specific pricing practices that are driving those trends and markups. We can just only observe that data more generally. I think if we're talking about the specifics of dynamic pricing and the sort of the focus of this committee's inquiry, we certainly see that sort of firms with a position of existing market power using pricing practices might be able to, dynamic pricing practices might be able to use that to sustain that market power and prevent fiercer competition from flourishing.
And how do you see in tackling that, so that actually there is it's not just dominated by one group of people or one company and one organisation?
I think ultimately through the work of the CMA we want to see the sort of combination of robust consumer protection to make sure that consumers are sort of taking the choices that are right for them, not influenced by misleading or aggressive sales practices, and that our broader toolkit, in particular our competition function, is making sure that the conditions are right for businesses to be able to grow, expand, invest in the UK. And we're using our markets toolkit as well to look at things that might be acting as barriers to that. And indeed, very actively looking through our engagement on our annual plan to seek views on the areas where the CMA should best target that work, areas where there may be things that are stopping competition from flourishing and businesses from being able to grow and expand in the UK.
Thank you. And this is to the Minister. So larger firms providing products and services to customers undoubtedly will have more sophisticated technology, data, influence algorithms to get consumers to change their behaviour or leverage their behaviour to actually buy. Do you think the market power from these companies to actual consumers, the direction of power has now been tipped too far to those big companies?
Well, I think that's something that we're obviously looking at the moment in terms of the call for evidence. There are, as we've discussed already, a number of different techniques or methodologies that are used to persuade people to buy products. And I think what we've got to go back to is first principles, which is this operating in a fair way? Is it operating in a transparent way? Is it operating in a way that actually encourages consumer choice and competition? And I know that we will have to keep an ongoing eye on this because technology clearly is evolving all the time and new techniques are coming out, and this is why this inquiry is so welcome, because we need to obviously deal with where we are now, but also have one eye on where the world is going to go next.
Thank you.
Thanks, Joshua Reynolds.
Thank you, Chair. George, you just said in response about things that hamper competition, and that was a key part. Do you not think, though, that a major events organiser in the UK being part of the same business as the UK's biggest ticket sellers reduces choice and competition?
I only feel well placed to comment specifically on sort of the framework through which we're looking at this, which is the sort of compliance with consumer protection. So this investigation is not looking at those broader issues of vertical integration. Obviously, clearly wearing my other hats, looking at the CMA sort of markets toolkit, we do look at the impact that vertical integration, market concentration can have, the barriers that might create, and how that may lead to adverse effects for competition and consumers. So I recognise that, of course, as a broader principle.
Minister, your views on the two being together and whether actually Live Nation and Ticketmaster shouldn't be together?
Well, I think it would be actually really useful to hear from Live Nation themselves. I think there were an awful lot of questions that were probably begging more questions from the witness earlier on. I don't know if that's something that you're planning.
That suggestion is noted. Okay. Thank you very much indeed.
All right.
Mr. Lusty, is it not true that in a range of sectors in our economy, market concentration has grown over the last 10 to 15 years?
Well, we've particularly looked at it recently, as your colleague on the committee mentioned earlier, through looking at trends in terms of markups. We think that's quite a helpful way to look at the sort of state of market power more generally. But it is, I do accept that in certain sectors we've seen increasing concentration. Sometimes that comes with benefits, and indeed it must be noted that vertical integration can often come with benefits in terms of the innovation and access to broader products and services that brings. We're looking at similar issues, for instance, through our veterinary services market study at the moment, and looking at what has happened through the increase in the number of large veterinary groups. In many areas that's driven sort of an increase in really excellent diagnostic practices, but it's had impacts on other areas that we're looking at as well through that investigation.
So I think the answer was yes. Is that fair?
I don't feel well placed to comment across the economy generally, particularly because the function that I lead is particularly looking at compliance with consumer protection in particular circumstances. And when the CMA uses its markets tools, it's looking at a particular sector of the economy and whether there's features of that market that need to be addressed directly by the CMA rather than looking at the landscape as a whole. However, the State of Competition report that we've issued does give you that broader sense of how competitive the UK economy is as a whole.
The conclusion is that it's not good, and the conclusion is that market concentration is leading to more and more consumers being ripped off, including by some of the biggest firms in the country. So when you look at the markups that are being that our largest companies are getting away with, those markups are much higher than in other countries. Is that not the case?
And I think we accept that there's been a reduction in market dynamism through the different indicators.
Okay, so what's the CMA been doing all this time?
So I think it's really important to note that we're also on the cusp of the CMA's toolkit, particularly on the consumer protection side, and our ability to tackle rip-offs and problems facing the public is being massively upgraded. That's really welcome. That's something we've been calling for since 2017, and we're really, really pleased that we're on the cusp of actually being able to access those new powers and drive that positive impact, because it's fair to say we're not seeing the standards of compliance with the consumer law that we would like to see, and we think that's partly been down to the enforcement regime not being as strong as it needed to be to deal with those issues.
You would dissuade us from concluding that the CMA was asleep at the wheel. You would prefer us to conclude that the CMA didn't have the powers to do the job.
The CMA has been very actively calling for those and been working really constructively with the government to push them through, and we are standing ready to enforce under those new powers.
Thank you, Chair. Minister, we've just heard about some of those powers, so can we still expect that enforcement ability under parts 3 and 4 of the Digital Markets Competition and Consumers Act is going to come into force? And that obviously includes the ability to levy 10% fines of global turnover on businesses. Can you tell us more about that?
Yeah, well, that's all due to come into force in April, and I think as we've heard very clearly from the evidence, this is something that I think is recognised across all parties and by the CMA themselves is something that's been long overdue. It's then the challenge is then for the CMA to be able to deliver on that. There are going to be some new rules coming in on drip pricing as well, subscription traps. We're consulting on the precise detail of that, so it'll probably be next year before that actually comes into force, but we're very clear that actually we want consumers to be empowered in this country. We absolutely understand the need for them to have the ability to have fairness when they're dealing with business.
And what's the tone, therefore, then, that you want to set with this new legislation? What is it that you'd like to achieve by doing that?
Probably summing up in one word, it will be fairness. People understand when they're buying something what they're going to be paying for, that there aren't hidden costs, that there's transparency about what this all means when they will be able to buy it. There won't be something added on later on, that there is an ability to get out of contracts if they've been signed up to things inadvertently. And where there are market abuses, the CMA have got the tools to really act on it, and that's what we want to see. We absolutely want to put more money in people's pockets, which means clamping down on rip-off companies.
Thank you.
Gregor Poynton.
Mr. Lusty, we've talked a bit about already the toolkit that's coming your way as a result of the rollout of the Digital Markets and Competition and Consumers Act. I'm just keen to get specific now how this will affect the way dynamic and variable pricing might be regulated.
So the key change when it comes to the Act as compared with the law as it stands right now is in relation to drip pricing. So there is now going to be a much more sort of specific and explicit requirement to include all unavoidable elements of a price up front, and that is no longer subject to a test that it has to have changed someone's purchasing decision. More generally, looking at broader issues about dynamic and variable pricing, the legislation is largely as was, but what is changing is the enforcement framework around it, in particular the much stronger powers for the CMA, the upgrade to the existing civil court-based framework. So that means the key test is whether the presentation of the price was fair in the sense that it avoided misleading acts and omissions, that the trader acted with professional diligence in how it operated the sales process, and that there was no element of undue influence or sort of aggressive sales practices in the process. So those are the tests that we would apply to determine whether variable or dynamic pricing is compliant with the law.
And considering those new stronger powers that will be available, more generally then, what future direction would you like to push business in when it comes to pricing and the wider purchasing environment for customers as well?
Yeah, pricing has been a huge issue for the CMA. We looked at it through various lenses, whether that's been loyalty pricing in supermarkets, unit pricing legislation, accurate pricing, reference pricing as well, where we've taken recent court action. What we'd like to see is that traders operate clear, fair pricing practices that people can understand from the get-go, don't get caught out, don't get pricing combined with other types of choice architecture, so misleading online sales techniques that put them under pressure. And we also acknowledge that that's what most businesses want to do, because they want their customers to have a really good experience of dealing with them and to come back. And that consumer trust and confidence is absolutely essential to the growth of the economy as well, and we recognise that.
Something I don't think yet has been covered, but is in those powers of the strategic market status.
Yes.
You're preparing to be in a position now to exercise those powers to designate firms in the digital marketplace with strategic market status and introduce pro-competitive interventions as a consequence. Are there aspects of a business's pricing strategy that you'll be looking at in particular when considering that designation and those powers you now have?
So it's a highly bespoke regime that applies to digital markets, both the process of designating a particular firm with SMS and then considering in light of that designation what are the appropriate conduct requirements. It's possible that elements of one of those designated firms' pricing practices could play into that, but it's also important to remember that all of those businesses are still subject to the general law too, which means they're subject to the risks of enforcement action if their pricing practices don't comply with competition or consumer law.
Johnny Maynard, very briefly.
Thank you. Yeah, so the new subscription contracts regime, this is a kind of trying to cancel a contract, the near impossibility of doing that as a human being. Royal Assent was received last May. Your consultation ends next Monday. It's not going to be, there's no date for implementation, it's next spring. What is going on for a year from the consultation closing to this actually being implemented? It just feels like more time for us all to be ripped off.
There's a consultation process, which is you mentioned.
Next Monday.
It was a cross-party agreement in the last Parliament as the bill went through. The main consideration was the fact that it's quite a big operational change for the businesses affected, and the consensus was a slightly longer lead-in time for commencement was
have a clear
necessary.
Date?
We've said spring.
Okay, clear.
As we know in Whitehall, spring is a pretty elastic concept.
What about getting radical and saying, February 1?
Spring would only mean April, so we'll either commence in April or October. But we've finished consultation, we will review the evidence, and then we'll be able to announce a precise date.
So spring means April 1 in that case?
It will either be April or October. But
October
after
isn't spring, is it?
No,
we've
said by spring. It really depends on what we've heard from the consultation, finishes next week, and then we will set out a date after that.
Right, we'll exchange some correspondence on that point, I think. Antonia Bance.
Thank you. Turning now to the poverty premium. We all know that poorer households and areas face higher costs for purchasing the same goods and services, including paying higher prices for groceries where they need to purchase them at convenience stores rather than out-of-town supermarkets or larger supermarkets due to the lack of mobility or access to those cheaper alternatives. To the Minister, is the Department concerned about the evidence showing how the costs of price variability may fall unevenly on poorer households? And if so, what are we doing about it? And to colleagues at the CMA, what evidence has the CMA observed in this area?
Well, obviously we're always keeping an eye on these things, and clearly in particular sectors such as energy, telecoms and financial services in particular, there are measures that those sectors have brought in to make sure that those on low incomes are not prejudiced by particular products being put at a different price or at a higher price. Obviously social tariffs is a good example of that. In terms of supermarket pricings, I think there was some research done on it not so long ago, but I'm not up to speed on it. I think that's probably something the CMA may be a better place to answer on. That's
right, and we completely recognise what you've described in terms of that discrepancy for those who can't access larger stores, who don't have access to as many big retailers around them or can't shop online, and that for them there is a different experience. Our recent work in groceries has looked at a number of aspects of how price competition is working, concluding that in general terms there is very healthy retail price competition in the UK grocery sector, and in particular we've looked at consumer law compliance as part of that, in particular ways that unit pricing rules could be changed so that people can really easily identify what's best value for money across a product range, looking at loyalty price promotions, how they work, recognising that in some respects those can be exclusionary if people under a certain age or who are digitally excluded can't access those promotions, and recommending that retailers take steps to close that gap. But fundamentally looking at the nuts and bolts of kind of correct and accurate pricing, and the CMA has been out and about in store inspections alongside our trading standards counterparts across the UK to make sure those rules are being followed. I just mentioned more broadly that we've been trying to understand and reported in 3 subsequent reports just what is going on with the core drivers of grocery price inflation. As I say, mostly concluding that those markets are healthy, but a warning sign in relation to baby formula in particular, and that's led the CMA to undertake an in-depth market study, which we'll be reporting very soon.
I'm looking forward to the results of that report.
Just on that point, Mr. Lusty, do you think it's then reasonable that the elderly, the less mobile, and say younger students who haven't got access to a vehicle have to pay a price premium for the same brand store in a town as opposed to an out-of-town store?
I think we recognise that we would like to see as much done to close that gap as possible, so that as many people benefit from the vibrant competition that they get when they have many retailers around them. But recognising for those who are in remote communities, don't have access to transport, can't shop online, can't access loyalty price discounts because of their eligibility criteria, that not everyone is able to access the benefit of that more vibrant retail price competition. And of course we want to see that gap come down so that more people can benefit.
So the last 3 years I've done a basket comparison of goods between an out-of-town and in-town, and it's about 20% difference between the 2 Tesco stores. Have you done analysis in the last 3 years into that?
We've looked.
And what have you done as a result?
Well, in particular, we've made a number of recommendations to government about areas that the law could change. We've taken action where we've seen inaccurate prices to make sure that those are being addressed. We've looked at the dynamics of loyalty price promotions and made recommendations to retailers about more that they need to do. It's also an area where the CMA has previously used its enforcement powers where it's needed to tackle misleading pricing practices. But more generally, what I think we see in the UK groceries market is that it is a really vibrant market where there is a healthy state of retail price competition. And I don't think we should be afraid to say that. There are certainly excluded groups, and I think the gap needs to be narrowed there. If you look across to other jurisdictions where there is much less competition in the grocery sector, where there are sort of very limited numbers of stores, you see evidence of poor practice and misleading and unfair commercial practices. And I think the healthy state of competition in our grocery sector is driving that good behaviour.
Okay. Just going back to the specifics about, say, online and the dynamic pricing we've been talking about. a lot of consumers very upset, sense that retailers, providers are using data that they're collecting, cookies, browsing histories and so on, in terms of establishing disadvantageous pricing for that particular consumer. Have you collected any evidence on that?
So we have looked at that in certain specific investigations. In particular,
do you have evidence of it?
We've looked in particular at the loyalty price promotions and the way in which sort of data is used and how the use of that data is explained by groceries retailers. That hasn't to us revealed a concern about the use of data, that the use of data in that context is inappropriate or any misleading statements are being made. It must be recognised as well that often that data is being used to personalise discounts and offers that people are able to access.
What about airline companies and so on? We've heard a lot about groceries. You seem to be quite strong and feel comfortable talking about groceries. What about airlines?
I think what's really important is that whatever use of personal data is being made has to be very clearly understood. That can bear down in a number of ways. The CMA has been active in travel sectors, looking at the role that commission plays, for instance, when people book hotel rooms, looking at the pricing practices of car hire firms as well. If people's data is used in ways that they would not expect, or indeed used against them in a way that they wouldn't expect to take advantage of data that it is inappropriate to use, that might include from an equalities consideration as well, then that would be a very real cause for concern.
How would you know that?
Ultimately, we would need to look at it in the context of a particular sector, and the CMA has the investigative powers that it needs to find out what's going on, to understand exactly what is being used and how that is being explained to the public.
Okay, Minister, are you concerned about the consumers' data may be used to exploit those consumers by these companies?
Yes, I am, and I've actually asked the department to look into this issue again. I understand that they did some research a few years ago which indicated that the use of personalised data was quite limited in terms of online sales, and where it was in place, it tended to only increase prices by about 0.5%. Now, I think instinctively that felt something that we needed to challenge, and therefore we've asked the department to go back and look at it again, because it does feel like it is something that it probably is happening more. And of course, as consumers, we can never be sure, can we, exactly what's going on.
And so, in terms of policy work, what are you doing to try and establish more transparent pricing?
Well, we're sorry. Do you want to go with that?
It was just mainly picking up that research. So, the initial finding was that price personalisation was fairly limited. I think you heard it from in the panel this morning, earlier as well. Feels a little bit counterintuitive. Hence, rerunning the research. We'll do primary research later this year, and just test a panel of consumers and their journey through websites to see whether prices are personalised. The thing we're trying to do here, the public policy challenge, is to distinguish personalisation that's leads to consumer detriment, and distinguish it from personalisation which can be beneficial, cheaper prices. And we need to establish that and establish our understanding of the problem before intervening.
Finally, Antonia Bounce.
Thank you. To the Minister then, you'll be aware that the Treasury have set up a new Financial Inclusion Committee, and it's going to be looking at a variety of things, but one of them is buy now, pay later. How involved is the Business Department in that conversation? Well,
we obviously are very supportive of that work. One of the members of the committee is the Chief Executive of Citizens Advice, who we fund through the department. And we're also pleased to note that the Money and Health Policy Institute are also part of that committee. I think it's early days in terms of what they're going to be coming up with, but certainly as the department responsible for consumers, we will be following it very closely.
And shouldn't the Business Department and the CMA be part of that committee, intimately involved in it?
Buy now, pay later is quite an active area of Treasury policy development. So the membership looks right to us now, but we stand ready to respond to recommendations and so on. As the Minister mentioned, we support some of the members directly as well.
Well, thank you very much. I think this is almost the opening of a conversation about our work together to try and bring consumer prices down and to ensure that competition is fair. I mean, I think we've heard a lot of recognising problems and wishing problems would change, but not a lot of fixing problems. And so I think we're really looking forward to hearing from the new chair of the CMA when we conduct those confirmation hearings. But Minister, it's been really useful to hear your perspective on this. Thank you so much for sitting through the session. That was really appreciated. I mean, just a final point really, are there other things that it would be helpful for us as a committee to look at when it comes to consumer protection? Other areas of research? I'd be grateful for your advice on that we could reflect on.
Well, at the moment I'm thinking quite broadly about the whole consumer landscape. It seems pretty fragmented in terms of how individuals enforce their rights. Obviously, we're hoping that the CMA's new powers are going to go a long way in terms of delivering that. But I know you've picked up the issue with trading standards. That's something that's certainly on our radar as well. And we are beginning to think about how we get a more joined up and more effective consumer enforcement role for everyone in this country. And I think it's something that's been neglected for far too long, to be honest.
Yeah. Thank you very much indeed. That concludes this panel. That concludes this session. Order.